When the economic environment becomes uncertain, we provide the truth from a breadth of perspectives to help people make decisions. We not only compile and analyze the data that moves our ever-evolving economy, we carefully craft our own to provide clarity across industries, businesses, and employment markets. We identify unique opportunities to deliver asymmetric returns and focus on capturing value created during periods of higher volatility, transforming the financial landscape together. We're MacroEdge.
Welcome, everyone, and good afternoon. It is 5 o'clock Eastern on Friday, January 17th, 2025, and this is MacroEdge Radio. Sorry for the delay. I had my time confused. I forgot about our hosts connecting flights. It has been absolutely insane. This entire month has started off exactly as some of us feared, with confusion, craziness, insanity. And those are the nice things we can say about 2025 so far. Without further ado, let's do a quick market review, which I know some people will disagree with myself, but the market was sort of for a rally today. Up 335 for the Dow, up 59 for the S&P, up 292 for the NASDAQ. My big red flag was breadth was sort of meh. And I don't think new highs, new lows is anything to write home about. Dow Transports, though, down 170, an indicator of future economic activity, along with the permits data and the fact that everyone was highlighting starts. As look at the great number of starts. People look at the headlines from this morning. They missed the forest for the trees once again. As usual, what people are missing is that it was mostly multifamily, and very few people understand that we have an issue with the data being produced. We're going to talk about that with our guest today, Joe Consorti. We're going to talk about Bitcoin. We're going to talk about the macro economy. We're going to talk about Trump's plans for the future. Let me finish this market review real quick. We'll bring our guest up, and we will start rocking and rolling for a hard hour of great discussion about what's coming, what we perceive coming, and how to deal with it from your future. Gold was down $12.39 today. Silver down 69 cents. WTI crude down 42 cents to 77.49. Brent down 53 cents to 80.76. Bitcoin, and this is a 4 o'clock close, up 43.20 to 104.620. It was up higher. Don't worry about it. Everyone is watching what's happening with Trump and Bitcoin. The 10-year closed at 461 for the week. 2-year 427.6. 10s twos down 3 ticks to 34 basis points. 10s threes or 3s 10s, depending on your perspective, up 1 point to 31 basis points. We're looking at a cornucopia of events occurring in a concentrated 240-hour period the next 2 weeks. So it's a good time to sit there and bring people on who want to discuss. Last week, we had Lawrence Lepard on. If you did not hear Lawrence Lepard, actually discuss the Bitcoin theory. Bitcoin is digital gold. We're going to enhance upon that this week with Joe Consorti. Joe, welcome to MacroEdge Radio.
Yo, thanks so much for having me, man. Yeah, no, longtime listener, love MacroEdge. You guys are, you guys are paving the way, for legitimate, unbiased, unmanipulated macro data and analysis. So my hat's off to you guys. I'm a big fan.
We appreciate the heck out of that. We all work hard. We all have different perspectives, and we all welcome everyone's perspective, because if you just get fixed on one opinion, let's face reality, you get CNBC. So please tell us more about yourself. Tell us about your theories, what you do, and your writings, and what's going on, and where they can contact you on social media, because I'll be the first to tell you, we want everybody to plug their book, their website, everything. We want people to read different opinions.
Wonderful. Thanks a lot. Yeah. So my name is Joe Consorti. I am 23, live in the Northeast United States. I've been in financial markets for the entire time that I've been working, right? So not an extremely long time. I'm about to turn 24 though, right? So that'll add a little bit more to my tenure. But essentially I got interested in markets when I was 18. I was a freshman in college, and they gave us free Bloomberg terminal logins in the library. And so I immediately took everybody up on that. Basically my day-to-day routine would be going to my classes, going to the gym, going to the dining hall, and then going to the library to, teach myself how to use this thing. And in that time, I began folding Bitcoin into my global macro analysis. And, I had been doing a lot of research on my own, obviously analyzing a lot of research, but doing a lot of my own research. I didn't necessarily have anywhere to publish it. And so I started publishing it to Twitter. Around that time, I was brought on to the Bitcoin Layer, which is now a Bitcoin and global macro research firm. Started as a really small Substack, and now we're a fully fledged company, 25,000 subscribers strong on Substack, 25K on YouTube as well. And additionally, I joined the team over at Theia, which, if any of you have seen me for a while or seen any of my videos, it's the big glowing neon sign behind me. Basically, it's a Bitcoin self-custody solution. So a lot of the issues with Bitcoin currently, and the way it appears in the headlines, is that exchanges and custodians basically get hacked, or something happens to them every so often, and customers lose their money. Basically, we created a self-custodial solution where you hold your own private keys. And so that's what I'm working on now. I run Theia Research, which is our research arm, just generally the same Bitcoin and global macro commentary I've been doing, focused largely on where Bitcoin's headed, the long-term debt cycle. I have a heavy focus on rates, and its impact on financial markets, Bitcoin's correlations to other major macro asset classes, and basically where it's going over the next several decades. So that's a little bit about me, how I got started, what I'm working on currently.
Absolutely love it, and love the information on where you came from. Now let's talk about where we're going, because the next 2 to 4 years are going to be some of the most fascinating in history regarding economics, currencies, cryptocurrencies, asset reserves, etc. What's your broad picture, broad brush perspective on where this is going to go once we get rid of the old guy who has no clue what a cryptocurrency is versus something in his depends? Let it rip, please.
Oh my goodness. Yeah, no, I think a little tinfoil hat, but I think there are multiple Joe Bidens. For one, I think that he's not just one person. I think they cloned him or something. They have puppets. They have several different variations. One's taller than the other, one's shorter, one's has a different shaped face. Anyway, that's separate. I think over the next 4 years, the story is going to be continued dollar dominance. I think that Trump has obviously proven himself as a guy who can head up growth quite well. Obviously, a lot of that doesn't necessarily have to do with him. Like he only has so much influence over the global macro backdrop. The Fed is obviously in charge of interest rates, but we saw during the first Trump administration, he was extremely adamant about tweeting basically every single day, at Jerome Powell, begging him to lower interest rates, saying that he's strangling the U.S. economy, saying we need negative, interest rates should be below zero, right? So, we know if they're below 2%, they're negative in real terms. Or 2.5 or 2 point, whatever the last print came in at, right? They're negative in real terms. And so we're already approaching that threshold, but we know that Trump is a growth guy above all else. He'll prioritize GDP. And he has historically also made a huge point to tweet out and basically project economic strength via posting charts about the stock market, right? So he talks about how SPOOs are up on the day, or the NASDAQ, or whatever. Any headline he can pull from, he tweets it, and then he says that, oh, this is all thanks to me, right? That's kind of been Trump's personal bellwether of, the U.S. economy is not necessarily GDP, but where the market is going. I have a feeling over the next 4 years, he's going to start incorporating Bitcoin into those tweets. He's going to say, look, Bitcoin hit another milestone. Yeah, you're welcome, right? And he's going to use that kind of as his barometer, his own personal indicator for U.S. economic strength, right? I think that his tariff plans are certainly interesting. But I do think of the next 4 years, we're already faced with this, kind of insurmountable debt problem. The solution, as it has always been, will be to run rates negative in real terms so that the value of the money we're paying back that debt in is worth less. The CBO, funnily enough, actually put out their budget and economic outlook for the next 10 years today. They published a new report, January 2025 report, out into 2025. I put out a tweet earlier, didn't get a lot of traction because not many people really care about that. The tweets that most people care about on my feed now are, what's Bitcoin doing? Where's it going? But ultimately, I care a lot more about the global macro landscape, particularly the deficit. So one of the funnier parts about this report was that they project they can bring the total deficit down over the next 10 years, if not keep it flat, which is so hysterical. They believe that they can bring down the primary deficit as net interest outlays increase as a percentage of the deficit, and then that'll keep it roughly flat over the next 10 years. If you just look at the deficit chart as a percentage of GDP, you could see that it has gotten wider and wider and wider over the last decade plus. The last time we ran a primary budget surplus was in like 2002 or 2003, when Bush was in office, when I was 3 years old. And so it's just an impossibility to bring down the deficit, right? All of these, projections that the deficit will come down are total nonsense, fairy tale land, because the reality is the United States economy has never been more reliant on debt, right? This is, this is why it's my favorite chart. The deficit is a percentage of GDP, because it shows how much of our economic growth is entirely dependent on spending more money than we make as a country. And that trend's going to continue, right? It's not like we can begin cutting spending. If we begin cutting spending through something like DOGE, which is this new, agency outside of government that Trump's forming, then, the economy will sink, right? If the deficit right now is like 6.5 or 7% of GDP, GDP is, coming in at 2 to 2.5 to 3% quarter over quarter. If we, try to eliminate the deficit in any way or keep it flat, then what happens is your GDP falls out from underneath you, right? The floor falls out from underneath you because you're kicking the legs in, right? And so that's basically the pickle I find the United States in over the next several years, right? The CBO will pontificate, as it always does, about being able to bring down the deficit, but it will be an impossibility. And so I believe what we're going to continue doing, just the reality of rates all across the curve. Let me look at where we are currently. You already striked all the numbers, but yeah, 10-year at 4.6. 2s at 4.25, right? Right now, our current average coupon on outstanding notes and bonds, excluding bills, is like 2.8%. And so that's already massive. And we have to roll a pretty big chunk of our outstanding notes and bonds over the next year. That's a pretty substantial increase from where we are currently, like 130 basis points conservatively, more expensive if we roll the debt, 150 to 160 as you go further out the curve. And so it's just an impossibility for us to reel in spending, and interest expense is going to become an even bigger problem over the next several years. It's already the second biggest line item on our, at the government level in our budget. It's bigger than national defense spending. It's about to be bigger than all of our unfunded liabilities, Social Security, Medicaid. And so we're basically at this point where we need to bring rates down. It's like an existential threat to the United States if rates stay where they are, because we can't roll debt at these levels, lest interest expense continue to explode totally out of control. It's already 1.5 to like $1.7 trillion annually, totally unsustainable. Plus, you consider that, we can't just stop issuing debt because rates are high. We need to do it. And the pace of, these auctions, the issuance schedule needs to accelerate. They need to grow larger. Otherwise, the floor gets kicked out from underneath the U.S. economy. So the story of the next decade, the story of the next 50 years is widening deficits, accelerating debt issuance. And in that same vein, people are going to want to hold something that isn't U.S. Treasuries, particularly banks as well, right? Banks are going to hold something that is not U.S. Treasuries because they're extremely susceptible to interest rate risk. We saw that in 2023. Now with the spike in yields that we saw over the last several months since like last September or October, balance sheet impairment at these banks is rising. And we know that on the other end of that comes a bailout facility from the Fed. And so banks, and particularly individuals who are privy to these issues, are going to want to hold assets that are not U.S. Treasuries, that don't have that type of exposure to interest rate risk. That said, Bitcoin doesn't serve that function now, right? If you look at its current market correlations, it just trades like a tech stock. It trades like the NASDAQ. But the reality is that Bitcoin is ultimately not going to trade with anything. It's going to be the least correlated asset in the global macro universe, because right now it trades like the NASDAQ, but its properties.
Well, I've got to interrupt you there. Right now, the correlation between the S&P 500 and Bitcoin is nothing short of amazing. I'd like your take on that.
Yeah, so the two are extremely correlated, but the one thing that I'll point out is that the S&P 500 has been really, really struggling in the same way that Bitcoin has been struggling. Hold on, let me pull up the two charts side by side. But one thing I do know is that Bitcoin has managed to not fall all the way back down to $69,000 where it was pre-election. The S&P 500, on the other hand, has made very little gains in the way of, advancing beyond that kind of post-election surge. And so, while this isn't like a regime shift, these correlations haven't, changed permanently. On November 6th, when the election happened, or November 5th, rather, SPOOs closed at 57.82. They're at 59.96. They dipped down all the way back to, their pre-election surge numbers just this Monday on the 13th. Bitcoin has yet to close that gap. In fact, Bitcoin, if I look behind me at my Bitcoin clock, it's trading at like $105,000 right now. And so over these last several months, even though Bitcoin does trade with the risk bucket, particularly on a day like today, when everything seems to be doing all right across the board. I'll take a look again. I could be wrong. Yeah, everything's up marginally. SPOOs are up marginally. NASDAQ is up marginally. And so even on a day like today where the risk bucket is doing really well, Bitcoin over the last few months has outperformed to a very immense degree. And so what that tells me is that the market is looking at the incoming Trump administration and seeing that it's going to be more favorable for, it's going to be favorable for risk, yeah, but it's going to be favorable more for Bitcoin specifically because of all of the legislation that he's imposed. And that's an extremely encouraging thing to me. I mentioned that, the Bitcoin will kind of over time, over the next several decades, take the place, as this kind of foundational layer of collateral that underlies global credit markets that U.S. Treasuries are currently serving today. But there's a lot that needs to happen in order to make that viable. One of the main things is repealing SAB 121, which is a totally arbitrary and convoluted legislation that disallows banks who wanted to custody Bitcoin from doing so. And Trump is very heavily rumored. I see Julian in the audience. He actually tweeted this out, and I found this out because he tweeted it. That it's heavily rumored that Trump is going to repeal SAB 121. It already went through Congress, but Joe Biden vetoed it. And we know that we have an even more pro-Bitcoin Congress after this last election. And so it's only a matter of time before this gets repealed and then banks are able to custody Bitcoin. And then, right, the financialization of Bitcoin can really begin, and it can really be serving as collateral for financial instrumentation, at least in the United States. And so, that ultimately will be Bitcoin's chief function over the next several decades. That's my thesis. That's what a lot of my writings are about. My mentor and I, Nick Bhatia, have been opining on this for several years now, that Bitcoin is ultimately going to serve as the pristine collateral that underlies global credit markets. And at that point, right, it will be a market cap that, you can't even fathom, right? The U.S. Treasury market is like, what, $28 trillion in size, something like that, close to 30 trillion now. Bitcoin ultimately, over the next several decades, I'm not saying it'll happen tomorrow, right? In the same way that Bitcoin kind of monetizes in this stair-step fashion, Bitcoin will rise through the market cap of gold at 18 trillion or 20 trillion, through the market cap of USTs, probably right around the time when USTs are, a 50 to 60 trillion dollar market. And ultimately, Bitcoin will be this massive, massive, massive asset that people want to hold in good times and bad. While it has a very, very stark, noticeable correlation to risk right now, I believe over time its properties, those of absolute scarcity, near infinite divisibility, immediate settlement, which is great for creditors, will allow it to serve as an asset that people want to hold in both good times and bad. So that's just me spitballing here, but that's basically what a lot of my writings, what a lot of my analysis is all about.
Well, I'll throw this out to you because I know you follow us. You probably listen to our shows almost every week. One of the things that we maintain as a theory is that a lot of the economic structure and actions are based on faulty data, data that's been perceived to be politicized versus actual collection of facts and then policy implemented, which was the way it was back when I was younger. When I was your age, it was, wow, we collected data. This is the impact. Let's implement a policy. Now it's like, let's make the data fit the mold for the policy we want to implement instead of creating a reality-based economic program. With that in mind, does that not scare you that we're proceeding towards a hyperinflationary, or in my theory, stagflationary scenario, which is going to cause extreme economic damage and a furtherance of the K-shaped quote-unquote recovery?
Yeah, no, it does scare me quite a bit. And that's, this is why I kind of preach the value proposition of Bitcoin. It's perceived as this extremely volatile asset. It's manipulated, it's this, that, and the other thing. But ultimately, it will serve to protect you from what's coming. All of the, all of this manipulated data is just to dissemble the economic truth of America. which is ultimately a widening out between the asset owners and the people who own few or no assets. If you bought a house 20 years ago, you're probably up more than double what you paid for it. The home I'm living in now, still living in my parents' home until I get married this August, and then we're going to move out just to be able to save for a home. Nevertheless, the home I'm living in right now, my parents bought in like 2004 for like $400,000. It's $1.1 million now. Granted, I live in a pretty good area, great suburb, but needless to say, people who bought these assets are now benefiting from these last several decades of Fed intervention and real monetary inflation. A lot of this boils down to people taking the headline data as absolute truth, and B, a great degree of economic illiteracy and financial illiteracy. When people hear inflation, they think what they immediately think of is prices, right? They think of the rate of price increases. When people hear inflation, what they should be thinking about is monetary debasement, monetary inflation, right? Rather than CPI inflation, right? As it's understood, because the CPI basket itself has undergone so many changes that it is an extremely unreliable indicator for the rate at which prices are actually going up. If you pull up shadow stats and you take a look at their actual, the actual consumer inflation numbers, based on the 1980s way that we used to do things, price inflation is running currently at like 11 to 13% annually, which is a really far cry from the last number that was just struck, like 2.7 or 2.9%, whatever it is. And so the reality is, like, people are struggling to make ends meet, but they don't exactly know why. They see that prices, inflation is down, and the political pundits and the media pundits, not you guys do a fantastic job at this, and this is why I like you guys so much. They will try to kind of obfuscate the two terms. They'll try to put both of them together and confuse people. They will try to say they'll try to say inflation is down, and equate that to prices being down, which couldn't be further from the truth, right? Americans are feeling the strain in their wallets. With mortgage rates at 7.5%, you can't go out and buy a home without paying, out the wazoo for it, right? If you run the calculations, if you were to put 10% down on like a $400,000 home, on a 30-year mortgage at like 2.5%, over 30 years, the total amount you'd be paying is something like, $490 or $510 something $1,000, right? A relatively low amount. Currently, 7.5% mortgage rates. If you were to put 10% down on that exact same house over your 30-year loan, you'd be paying back more than $800,000. And so it makes it so that home ownership, for people in my generation, seems increasingly out of reach, but people just don't know why. And this is twofold, as I mentioned, right? A manipulation of the data, but then economic illiteracy, which I believe is deliberate. This problem is so bad that our schools intentionally, through the Department of Education, just have not prioritized and have totally intentionally neglected teaching people what's going on, teaching people about interest rates, teaching people about what the Federal Reserve does, creating these bailout facilities, pumping new money into the economy, right, in the form of credit that does not require any collateral, giving these sweetheart deals to banks who should be going under, but they aren't, and so they continue their bad lending practices, coupled with manipulating the cost of capital for the entire global economy. Obviously, U.S. Treasuries are the largest and most widely used benchmark rates. The Fed, by setting its interest rates, is setting basically the world benchmark interest rate. It's influencing U.S. Treasury rates. And so what the Fed is doing, like, it's this all-powerful institution that steals economic prosperity from people. And that gets more into the libertarian side of things. But to boil it down, this is why I preach Bitcoin so fervently. Why it's kind of at the center of all my analysis, but I try to have a global macro framework to help people understand these things and understand how Bitcoin fits into all of it, is that Bitcoin at an individual level, it's divisible into 100 million units. You can get 100 or lower than 100, but just about 100 Satoshis, which is the individual unit of Bitcoin, for 1 cent, right? And so Bitcoin is the least accessible or the most accessible way for you to hedge yourself against everything that's happened over the last 20 plus years and everything that's going to continue happening at an accelerating rate, right? This money printing, these bailout facilities, the manipulation of interest rates, and the data. Bitcoin is the best way of insulating yourself from all of that. And so those are kind of my thoughts on the data manipulation. You guys do a great job of talking about it. You know, I've kept my eye on it as well, particularly the revisions, right? I make a reminder every single month when these new data prints come out, particularly NFP, to take a look at the revisions. And I recall just there was one point early last year where they were just completely insane. You know, like if you took a look at the revised numbers at the end of the year, it was like 800,000 jobs less than was reported. And this is the strategy. We project growth by making the headline way higher than was previous, you know, than the reality. And then the next month, when nobody's looking at that headline, we quietly adjust it downward and we go about our business. And so in this way, we shield the American people from actually knowing how bad the economy is. And in the headline data itself, it being manipulated, you can't even get a gauge from the revised data of just how much people are struggling. But you can anecdotally, right? And so again, that's why I praise your guys' work so much, because you actually make a fantastic attempt at showing people what's actually happening.
Appreciate that, sir. And believe me, everybody here in the team works hard to do that. So let's start veering in from the macro and into the crypto world, which is something to be upfront. I'm not a participant. I'm a hard asset person, always have been. And there are some parallels, except I can go and touch mine and bathe in it, etc. The tokenization of assets versus hard assets. I view the tokenization of non-existent assets as something scary versus a Bitcoin or an Ethereum. And I have to be upfront and honest. I do own some Ethereum. It was a gift. Believe me, it's hard to explain. What do you think is the dangers of over-reliance on one or the other?
Right. So, sorry, I was eating something there. Forgot to mute my mic. First thing I'll say is flip that Bitcoin or flip that Ethereum into Bitcoin. ETH BTC, the you know, just the pair between the two has been in a complete death spiral. This awful downward spiral for the last 2 years, and it's hysterical to see. People on Twitter who like Ethereum are, you know, they have .eth in their usernames, and there's been this huge exodus of people removing it from their names. And the only people left are like these, you know, hysteric freaks. So yeah, even though you don't hold it, I would recommend flipping that Ethereum into Bitcoin before you lose more money. But the thing I'll say there is that there's Bitcoin and then there's crypto, right? And, you know, I'm doing air quotes, but you can't see it. In all of my writings and all of my tweets, all the research I've ever published, you know, dating back a couple of years now, I've made it a point to put crypto in quotation marks. It's in our official style guide for the Bitcoin layer and Thea research, because these two things just couldn't be more disparate from one another, right? Bitcoin is completely neutral, right? Its rule set can't be tampered with. It's completely unchanging forever, right? And its rule set is wonderful. There is no supply response function whatsoever, right? Unlike these other hard assets, unlike gold, you know, when the price goes up, miners have more money to go find new spots to take gold out of the ground, or they increase their existing operations, buy better equipment. That increases the supply schedule of gold. It brings gold's price down at the margin. And then ultimately, what you have is something that isn't absolutely scarce, but it is relatively scarce. Bitcoin, on the other hand, is absolutely scarce with a disinflationary supply schedule. So currently there are just under, I think, just under 20 million Bitcoin in circulation. The cap on that is 21 million Bitcoin, but that won't be reached until 2140. So every 4 years, the supply schedule of Bitcoin is reduced by 50%. And so for the last 4 years, it was 6.25. In April of this year or May of this year, it was reduced to 3.125 programmatically. And this is something that the Bitcoin network has to do. It's in the Bitcoin protocol. Anybody can run this on a computer. They're called nodes. Basically, they're, you know, tens of thousands, hundreds of thousands of computers. We know that there are tens of thousands, but probably hundreds of thousands more running completely anonymously around the world. You could think of it as like a Mexican standoff, right? You know, in a Mexican standoff, there are three people pointing a gun at each other. If anybody moves, right, chances are you all die. With Bitcoin, think of it as a Mexican standoff, you know, to the power of like 5. There are, you know, tens of thousands, if not a few 100,000 of these computers pointing a gun at each other. And if anybody decides to break the rules, they're no longer running Bitcoin, they're running something else, right? And so for that reason, you know, and this is irregardless of how many people try to come onto the network and change the rules, they get immediately booted off into what's called a soft fork. Whatever rule change they make, they're often mining some worthless coin that there's no market for, right? And there have been hundreds of examples of these throughout, the last couple of years, or the last 16 years that Bitcoin has had a market price that it's been running as well. And so ultimately what you have with Bitcoin, this asset that will be capped just below 21 million units for all of time, right? Until the world ends, until Jesus comes back. You have this, given that it's absolutely scarce, right? It kind of breaks all economic models, because in all economic modeling traditionally, right, there is a supply response, right? As the price rises due to increased demand, right, there's a supply response. More supply comes online one way or another. People find cheaper ways of doing it. They find new allotments of it in the ground. They find gold in asteroids, right? Whatever it is. Whereas with Bitcoin, that's not the case. And so that's the value prop ultimately of Bitcoin, is that it's this absolutely scarce asset that you have juxtaposed against a denominator that just cannot stop becoming more worthless every year. We talked about how CPI inflation is manipulated. If we take a look at actual, CPI inflation, actual price inflation is probably closer to 10 to 15% annually currently. And you look at monetary debasement, and it's right around the exact same, right? 10 to 15% annually, the rate at which the money supply is being debased. And so with that, you have a few choices. You can own hard assets like gold, which are fantastic and will continue to serve that inflation hedge function over the next several decades, over the next millennia, right? I don't expect gold to, stop serving this function. But right, there is a better asset for serving this function out there, and it's slowly but surely monetizing to the size of gold. And that's not me
so
saying
I hate to interrupt you real quick, but that brings a question forward that's on my list of questions for you.
Mm-hmm.
And that is, it appears that Russia and El Salvador and a few other nations are way ahead of us on the Bitcoin curve. You see El Salvador just breaking it in, Russia beginning trade in Bitcoin. We're so far behind as a national entity in this environment.
Oh, yeah.
Do you think that the American government is capable of shifting gears that hard and that fast to accomplish some of the goals you seek? And from that perspective, does the inability of a national entity, the Treasury, et cetera, and this is where Trump comes in, to recognize that as such, make it difficult for the average person to assign a valuation to these assets?
Right. So I said this in a podcast I did earlier today. How on earth do we create some kind of price projection for where Bitcoin's going if all of a sudden last July it became suddenly like a geopolitically important asset? There were rumblings of it in 2021 when Russia invaded Ukraine, or 2022, I can't remember, when Russia invaded Ukraine. These sanctions came about. Russia began discussing how to skirt around these sanctions. Ultimately, one of the big things that they chose to do was just take all of their stateside companies that were operating in the US, continue to operate them just under a different name. But largely that's a patchwork issue. Ultimately, not being plugged into US dollars means you're largely cut off from global trade. You have to figure out another way around it. And the talk of, these nations about how do we get around these sanctions, how do we get around having to use the US dollar for foreign trade, has been to create this basket of currencies, BRICS, and then back it with a commodity. The commodity that they were considering for a very long time was gold. But there were rumblings more recently that they were no longer considering gold and considering, something else to back this basket of currencies that they could all trade with. They could all hold it. They could all trade with it. It was backed by a commodity. And there were rumors that Bitcoin is the currency of choice to back this new currency that they're considering. And so you have that. You also have the Russian finance minister who was speaking about the merits of a national Bitcoin reserve, which is massive, right? All of a sudden last July, what Donald Trump did at the Bitcoin conference in Nashville was he announced that he would pursue the establishment of a strategic Bitcoin reserve. He called it a national Bitcoin stockpile. A little bit more aggressive, if you ask me. But the Bitcoin Act of 2024, introduced by Senator Cynthia Lummis following Bitcoin Nashville, outlines the creation of a strategic Bitcoin reserve. And so all of a sudden, the world's major superpowers are discussing actively accumulating Bitcoin on a global stage, right? Not just holding what they already have. For example, the United States has about 207,000 seized Bitcoin, which makes us one of the largest, the United States, the single largest country that holds Bitcoin, right? The entity, the country that holds the most Bitcoin, right? Not just holding what we already have, but actively accumulating it. And so it becomes very difficult to assign a price to this asset, which could very well be on the verge of being actively accumulated by some of the world's biggest superpowers, mind you, who have infinite balance sheets, right? We know that the pockets run infinitely at these places because they all have money printers. Every single central bank does. And the United States, most of all, has the most powerful money printer of all, given that our currency is the most widely used. As a percentage of FX reserves, the dollar is like over 50% still, and it's risen over the last 2 decades. So with the dollar even more entrenched in global FX reserves, and us, the adversarial tension between China and the United States never being higher, right, over the last 2 decades than it is right now, with Russia at war with Ukraine, and with China probably going to invade Taiwan relatively soon. Now that Trump is in office, we could probably avert that. If Kamala Harris was in office, I would probably be drafted and suiting up to go fight in Ukraine or Taiwan in short order. But nevertheless, tensions between us and all of our adversaries have never been higher. And so at this point in time, right now, these nations have never been more incentivized to get off of the US dollar, or at least reduce it in their foreign exchange reserves. Russia has done this. China has done this to a smaller extent. And they're looking for alternatives. They're looking for ways of engaging in trade between themselves that does not have to do with the US dollar. Okay, what can the United States do if Russia and China are talking about stacking a bunch of Bitcoin in order to back this basket of currencies that they'll skirt around US dollar sanctions with and not have to use the US dollar with? The United States can make it more expensive for them to do that, i.e., accumulating Bitcoin before they can, right? Pushing the price higher so that it's more expensive for them to try to skirt around US sanctions until they can't buy as much as they need to or want to, or it becomes not economically viable for them to do so. And so in this way, Bitcoin and the US dollar are actually supportive of one another. I also say this because the United States, has the most free capital markets, the most free and open capital markets, the most free and open individual liberties. Like, I love the United States. This is the best country on the earth, right? That said, it is in our best interest to, begin actively accumulating Bitcoin, right, in whatever quantity we can, in order to make it less economically viable for our adversaries to take away the power of the US dollar at the margin.
Well, let's go forward with this because I have a major concern. And my concern is that the distortion of Bitcoin and other more viable cryptos due to the mass issuance of, I'll be polite, meme coins and shit coins.
Yeah, shit coins.
Is that not a dilutive aspect that the market needs to be concerned about? Because I think the dilution of the market by introducing those, and even worse, in my opinion, some of the exchanges trading them, really diminishes the value of the exchanges and crypto as a whole. Please take a quick shot at that, and then I got to do a quick commercial.
It does. So, every single PR agency at all of these exchanges, there's basically only one Bitcoin only exchange worth its salt in the world, and that's River. They are a fully reserved Bitcoin only exchange. You can look up their proof of reserves. It's cryptographically verifiable. Anybody can do it on their website, and they report it monthly. So you can check their holdings. They don't do any kind of Bitcoin-backed loans or anything like that. They're a very conservative Bitcoin exchange with no financial instrumentation to speak of, or very little. And so you have them. You have basically this one shop where you can go. You have a very high degree of certainty that your Bitcoin is being held there. Nothing funny is happening with it. But then there are hundreds of others, Coinbase chief among them. It used to be FTX, but then they went the way of the dodo, who list all of these garbage shit coins and try to conflate them with Bitcoin. So if you go to the App Store, if I search up on Google Coinbase App Store, and I pull up Coinbase, if I pull up the Coinbase app, it says Coinbase, buy Bitcoin. But then if you go to their exchange, what they list on the front page is this litany of shit coins that have nothing to do with Bitcoin. And so that's extremely dangerous, right? As Bitcoin's price goes up, these people who have bad intentions, whether it's a shitcoin dealer, someone who makes this stuff, or whether it's an exchange or whether it's a hacker, they are more incentivized to take your Bitcoin from you. And one of the most popular ways this has been done has been conflating Bitcoin with quote unquote crypto, right? Convincing you that, Bitcoin is already so large, which leads into people's unit bias. They don't know it's divisible into 100 million units. Bitcoin's $100,000. You'll never own one. How about you buy Dogcoin instead? Dogcoin is a really low market cap. And look at this great team behind it. And so there are millions and billions of dollars being poured into, PR and marketing for this other stuff that isn't Bitcoin, in order to try to take money from people who are trying to learn more about Bitcoin or buy it and hold it, right? The merits of Bitcoin are always tainted by these people who are trying to ride its coattails. Do you want to know the marketing budget of the Bitcoin marketing department? $0. Do you want to know where Bitcoin headquarters is located? All around the world, 24/7, 365. There's no central location. This is completely all across the world, totally decentralized, right? Again, in the analogy I gave earlier of these hundreds of thousands of computers pointing a gun at each other and saying, if you break the rules, we'll kick you off the network. And so these two things couldn't be further apart, right? Whereas Bitcoin is absolutely scarce, crypto, quote unquote, is not. Whereas Bitcoin has an absolutely immutable monetary policy, crypto does not, right? Whereas you can have absolute.
Hold on a minute. We were talking about all this. Let's go steer back into the bigger picture with Trump coming in office. But real quick, folks, MacroEdge.net, Ozone, MacroEdge.net/Ozone, 2-week free trial. Go to MacroEdge, check it out, get your free subscription. With that being said, Bissett came out during his hearing this week and said no CBDC. Now, a central bank digital currency would seem to be essential to promoting the coins, and Bitcoin logically would have been the choice to promote versus a Fed coin or whatever the hell the Federal Reserve came up with, the Powell coin, which would be a shit coin, by the way. What is your take on his comments, real quick?
So that's a tremendous development for Bitcoin, and it's a tremendous development for U.S. dollar holders. You do not want a CBDC. With the CBDC, what the Fed would be able to do, and the Treasury, right, in tandem with one another, would be able to do very totalitarian things, that you see in headlines only out of China, right? Where they freeze your bank account because you said something wrong on social media, or they give you an individual personalized interest rate. Where they can adjust it, at their will based on things that you say, things that you do, your buying habits, etc. And so it would basically make it such that the United States would have this, they'd be this puppet master. They'd be able to control what you can do with your money, the purchasing power of your money at an individual level. That's very bad. And so Bissett coming out and saying that they'll halt all development of a CBDC, there isn't going to be one, is an extremely good development. Bringing it back to what we were speaking about a moment ago with this kind of conflation between Bitcoin and everything else, it is extremely dangerous. And the only way that people can get around this, particularly as we head into the next year, with the prospect of these G7, G20 nations considering accumulating Bitcoin should the U.S. decide to move forward, or as the likelihood of the U.S. moving forward rises, is more education, right? People need to learn the difference between Bitcoin and crypto. And so that's what I've been adamant in everything that I write and everything that my colleague Nick writes, to put crypto in quotations and kind of ward people off and away from investing in these things. I'll give you a real world example. A gentleman at my church unfortunately got into quote unquote crypto trading. He's 60, 65. He isn't technologically literate at all. He was lured into quote unquote trading this stuff, and he lost $4,000 in doing so. He got hooked up with a fake app. He basically dumped everything that he owned into this app. He lost like $4,500. Thankfully, through the grapevine, he was able to learn through our church, because I work on the parking team there, that I work in the industry. And so I was able to talk him down from the ledge. But the frequency at which people get scammed and conned out of all their money over the next several years because they're enticed by quote unquote crypto is only going to rise. And so it brings about the question, like, what on earth can we do about this? How can we stave off, these other assets from harming people, right? Harming individuals. And to me, it just boils down to more education, right? We need more people delineating between these two things on a wide scale. We need more people using their voices to speak about the differences between these things. And ultimately, in some sense, it is paying off, right? If you take a look at the cross between Bitcoin and Ethereum, which is the second largest coin by market cap, I mentioned it earlier, it's been in this total death spiral for the last 2 years. it was as a result of monetary policy changes within Ethereum. But nevertheless, it highlights this broader shift away from everything else and into Bitcoin. And that was further aided by the collapse of FTX, right? FTX at the time was either the second or first largest quote unquote crypto exchange globally. They completely collapsed. And it made people very, very wary of quote unquote crypto. Yet even still, Bitcoin is now trading at $105,000. And so even through that, it managed to recover. Over the next decade, everything you see now that is a non-Bitcoin asset will basically disappear. If you look 10 years ago, there was a screenshot that was circulating of some guy's old portfolio. I think it was like 10 years ago when Bitcoin was, like $300, $400 or $500. And every single coin that was listed on there is completely gone today, right? It's gone, or its market cap is, sub 5 figures. The same will happen over the next decade plus. It's inevitability that these things will die, but it becomes a priority for not just all of us as individuals, but for the United States writ large, now that it's going to be, potentially actively accumulating this asset, or at the very least reclassifying what we already hold as a national reserve to explain to people the difference between these two things so they don't get conned.
Well, I'm going to bring this up to some of the questions and concerns that I have. There's two issues that I see coming up that have entered into the finance world, and I'm the big credit guy. That's just not who I am, not what I've traded. No history, no record there. I'm a historian. I look at big pictures. And my two concerns are the idea of Bitcoin and other cryptos being used for bonds, and the new mini crypto ETFs where the quote unquote big houses will introduce baskets of cryptocurrencies, and including some of what you would like to call lesser ideal currencies into these baskets. I think that is a long-term negative impact. Make it as short and sweet, because the big question I have for you to end this program is going to really take a few minutes to answer. This is one of those subjects that bothers me, though. Bitcoin bonds, some of what MicroStrategy has been doing, it's disturbing, because even Cointelegraph asked, MicroStrategy's Bitcoin debt loop, stroke of genius or risky gamble, from Johan Yoon. There's a bigger picture here that I don't think people look at. You look at it at the level of the investor and as a speculator, honest, upfront, and to the point. My concern is the general public's going to see a tag, something flying by on the ticker that's up 7, 8, 12% in one day and say, I got to get on board and get burned severely.
Yeah, so it is dangerous. It's very dangerous. I just pulled up one of the crypto ETFs that launched like mid 2021. It still hasn't broken its all-time high that it made, in December of that year. The same time Bitcoin crested $67,000 for the first time. So on a long enough time horizon, even during bull markets when there is marginal outperformance and diminishing outperformance among these, altcoins, shit coins as we call them, right? Even in that environment, people will still be drawn to it. But again, this cycle in particular, and I actually haven't said this yet, but this cycle in particular is one where, despite the bull market dynamics we've entered into, crypto largely is not outperforming Bitcoin. Again, as evidenced by that ETH BTC pair. One of the things that we wrote about a while ago at the Bitcoin Layer was that we call Ethereum the mother of all shit coins, because it's the second largest, right? It is what everybody looks to kind of gauge where the industry is at relative to Bitcoin. And that pair has completely been biting the dust over the last several years. Thank you, Sam Bankman-Fried, for committing mass-scale fraud and accelerating the death of crypto. But it is very dangerous. But ultimately, it's something that is always going to be dangerous. There are always hucksters out there, always scammers out there who want to take their hands, put their hands on your assets, right? But with Bitcoin specifically, because it's such a new and emergent market, people have absolutely no idea what they're doing. And so there are, so many hucksters out there who pose as helpful people, but sometimes they wear suits. Sometimes they create ETFs. Sometimes they create other products for people to purchase. Those things are incredibly dangerous. So people need to be very wary of that. As far as MicroStrategy goes, look, it's as simple as this being a leveraged Bitcoin play. This company is leveraging the public capital markets, debt and equity in order to accumulate more Bitcoin. And it's an extremely interesting story, right? In August of 2020, they first adopted this strategy. Today they're at, $400 something or high 300s. And so it's a very interesting story. Regardless of what happens to that equity in particular, it's a story that now is more popular than ever, right? The concept of holding Bitcoin in your corporate treasury. We're actually building a product for this at Thea that we're going to launch next week that allows Bitcoin businesses to self-custody their Bitcoin, i.e. not holding it with a custodian, holding it on their own. But regardless, this is a major trend. And I think whatever people think about it, right, whether they approve of Bitcoin or they don't, I think either way, it's very interesting that a lot of companies are now choosing to adopt this as either an asset in their treasury or their primary treasury reserve asset. Over the last year, you've had names like Semler Scientific here in the States, Metaplanet as well. It's being put up to a vote at Facebook, of which the newly knighted right-winger Mark Zuckerberg owns a majority of shares for. And so regardless of what people think about it, it's a very interesting story. And me personally, like putting on my spectator cap, I'm very interested to see what the trend is going to be like over the next several years, over this next year in particular, as it pertains to Bitcoin as a treasury asset. And I think this is the last thing I'll say. It speaks to Bitcoin kind of fulfilling its value proposition, right? And cementing itself as a more legitimate global macro asset class. It's the 7th largest asset in the world by market cap. You have like gold, Microsoft, Google, Saudi Aramco, a couple of others, and then Bitcoin, right? It's number 7. And so people can ignore it for only so long. But ultimately, when you've had an asset that's experienced 15 years of, you can look at it two ways, right? You could see, oh my goodness, Bitcoin crashes all the time. But you could also zoom out over the last 16 years and say, wait a second, it resumes its all-time highs. It's been in this stair-step, systematic, structural adoption process for 16 years, so much so that nation states are now considering adopting it as a reserve asset. They're not considering quote-unquote crypto, they're considering Bitcoin, right? And so for anyone in the audience that might be skeptical, I would encourage you to read some books, learn a little bit about it. I've got some good materials for people to read. And obviously, as an investor, never buy what you don't understand, right? So not financial advice whatsoever, but I would encourage people to learn more about Bitcoin, specifically the differences between Bitcoin and everything else, and try to understand a little bit about why its price has gone up for the last 16 years.
All right, Joe, it's time for the big question. I appreciate all of your information and your takes this hour. We're going to wind this down with a big question, which is what I do to every guest. Article 1, Section 10, Clause 1 is totally related to what we're about to discuss. Trump wants to create a strategic Bitcoin reserve. There's no constitutional authority for such, as it states no state shall enter into a treaty, alliance, or confederation, blah, 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 make anything but gold and silver coin a tender in payments of debts. With that in mind, if he is going to establish a Bitcoin reserve, but it is not accepted as legal tender, would or would not, in your opinion, the U.S. government, and that means the Congress, the bunch of 535 ignoramuses minus Thomas Massey and Rand Paul, have to sit there and amend the Federal Reserve Act of 1913, which gives them exclusive authority to issue currency for the United States?
So there are a couple of ways of doing this that would not require any constitutional amendments whatsoever. And
it's not a constitutional amendment. It's an amendment to the Federal Reserve Act. The Federal Reserve Act was not a constitutional amendment. It was a law, legislation passed by the House in 1913. I'm talking about amending that act to provide that power to them to issue, acquire, or store Bitcoin as a reserve.
Right. So there are a couple of ways that this can be done. The first and the most noteworthy of which, I'll actually share it up in the nest. I couldn't find a link to it directly, but the Bitcoin Policy Institute has been doing great work in. Well, I actually can't share it. I can't do it on desktop for whatever reason. Anyway, the Bitcoin Policy Institute, which has done wonderful work in Washington, look at that alliteration, as it pertains to Bitcoin, has put forward a draft executive order to establish a strategic Bitcoin reserve without needing to make an amendment to the Federal Reserve Act. There's another law that's being put forth called the Bitcoin Act of 2024, which has a lower likelihood in my mind of being passed into law. That's the one that outlines the establishment of an SBR, the active accumulation of 1 million Bitcoin over 5 years, and holding that Bitcoin for 20 years at a minimum before Congress decides what they want to do with it. That seems, there are much more hurdles to jump through, including amending the Federal Reserve Act in order to get that one into law. The one that has a much higher likelihood of going through, and then I'll even give another variation of how this could be done, is designating the Bitcoin that we currently hold as a strategic reserve asset within the Exchange Stabilization Fund. So they put forward this draft executive order. Basically, it's like this plug and play. Anybody can read it. You can go to the Bitcoin Policy Institute's website and take a look at it. But basically what they've done is they've drafted out the executive order. They've done all the work for Trump that outlines exactly how the United States could do this within our existing laws without having to change any laws. Basically, the first step of this is establishing it, right? So the SBR is hereby established, administered by the Secretary of Treasury with the goal of enhancing diversity to reserve assets. The second aspect of this is that within 7 days of the date of this order, any Bitcoin under control of any federal agency, including the United States Marshal Service, shall not be sold, swapped, auctioned, etc., and be transferred by the head of such federal agency to the SBR. So basically what this means is that all the United States has to do is reclassify the 207,000 Bitcoin that we already hold as our quote unquote strategic Bitcoin reserve. And what they can, basically the change that needs to be made, and this is the third aspect of their draft executive order here, is that they would need to designate Bitcoin as a strategic reserve asset suitable for purchase and holding within the Exchange Stabilization Fund. So this is essentially, what you brought up earlier, right? The Federal Reserve Act. This is the small change that would need to be made in order for this acquisition program for Bitcoin to actually come to pass. It's a pretty big change, right? But given what Congress has spoken about previously, what Congress has talked about as it pertains to, excuse me, I'm losing my train of thought. Congress putting through SAB 121, right? Obviously, it got vetoed by Biden, but Congress is already, playing ball when it comes to Bitcoin. And so, for me, this is a relatively small change to an already, pro-Bitcoin House and Senate. All that would need to happen would be for these acts to actually reach the floor. This executive order can be signed by Trump, largely without issue. The Bitcoin Act of 2024. Can go to the floor for a vote relatively soon. Senator Cynthia Lummis out of Wyoming is working hard on it. And so it would require a change to the Federal Reserve Act. It would require designating Bitcoin as an asset that's suitable for purchase and holding as a reserve asset. But that said, it's a relatively small hurdle to jump through, given we not only have the incoming president who's very enthusiastic about this and he wants to do this, but also many people who are already working in DC who have these powers that want to do this as well. And so for me, this is the last thing I'll say here, unless you have a follow-up, is I'd probably assign a 70 to 80% likelihood of an SBR happening within the first year of the Trump administration, right? Whether that comes in the form of the Bitcoin Act of 2024, right? This plan to actively accumulate Bitcoin, or just reclassifying what we already have as, the strategic Bitcoin reserve. Whatever form it may take, I think there will be some kind of formalization and establishment of an SBR in the next year.
Joe, thank you so much. One more time, plug your information, Thea, and where you can be found on social media.
Absolutely. Thanks so much for listening in, guys. And yeah, I love that you guys listen to MacroEdge Radio, much better than CNBC. Don't listen to those dorks over there. You can find me on X. Just click the profile that's speaking now. You can give me a follow if you found any info valuable, or you want to learn how Bitcoin fits into the global macro landscape. A lot of my tweets are about rates, so if you like rates, you can come over and take a look at what I'm tweeting about. And you can also check out Thea. It's a Bitcoin self-custody solution that we've built and developed over the last year. The link to that is also my profile. Then the other startup that I'm working on is actually extremely cool. It's called Horizon. It's basically a way for homeowners to diversify home equity into Bitcoin using the existing framework of home equity investments. And so if you live in a place like California or Massachusetts that has had insane home price appreciation, or Austin, Texas for that matter, that's had insane home price appreciation over the last several years, and you want to diversify into something that isn't, growing at 4 or 5% CAGR, but something that's growing at 30% CAGR, check out Horizon at joinhorizon.com.
Joe, thank you so much for being a guest this week. And folks, MacroEdge.net/ozone, MacroEdge.net/ozone. Next week, Mark Rosano, Chief Executive Officer of C6 Capital. We will be heading up into the new world, not a new world order, a new world starting on Monday. Buckle up, be prepared, watch the markets. It's about to get a little spicy, and all of us will be writing about it. For MacroEdge Radio, this is John Galt. Good night.